Welcome to Trading Lounge and the Forex report for the European crosses, and starting with the Euro US dollar here. We've got two counts here, both bearish. First of all, we've got, we'll look at this alternative count here, and it being a triangle pattern. And in the triangle pattern, we're basically where this little arrow is at the moment. It's not that these two counts are much different from each other, actually. So this wave 4 up here is this wave 4 here, and wave E here as a triangle is in 5 waves, in A, B, C, D, and E. And wave E would pull back up 61.8% of wave D down here. So we could also look at the same thing as this D being wave 1 here. So this would be wave 1 here and wave 2 here. So the difference with this particular count that we're looking at the moment is that we're looking at 5 waves down here, okay? With the triangle pattern, we would only be looking at 3 waves down here. So an A and a B and a C wave into the 50-60% retracement level here, and then another 3 waves up 61.8% and as wave E, and then down again. So we'll track both counts, and yeah, we'll see how we go. The move down here so far is moving quite swiftly, so it's really got the personality of a 3rd wave and not a C wave. Okay, so within this wave 3 here, or wave C, if it's the triangle, we'd be looking for 5 waves down into 1.1 area here. It may be a bit shorter, maybe a little bit longer, but you get the picture here. We've got this longer term trend line coming through here, which would sort of support the triangle sort of pattern. But at the same time too, in terms of price or trading levels, 1.1 here is obviously going to be the support here. So even this particular wave 1 here and so forth, we could probably sort of bring that more into perspective here, and looking for support for this here as such, based off this consolidation low here. I'll just save that. When that chart goes dark, it just means that I'm saving it, that's all. Okay, so just drilling in here, and we'll look at the 2-hour chart, but I think we really need to go into the 15-minute chart here for this. So yeah, that's not really giving us much, is it? So let's go in here, and now we're getting somewhere. So we'll just focus on this wave 2 here. So from wave 2 here, it's quite a clean count really. So we've got, you can see we've got little 5 waves in here for wave 1 and little A, B, C for wave 2. Wave 3 is really doing its thing in terms of being strong, but the whole wave would be strong because we're in this 3rd wave. So wave 3 here, wave 4 here, and we can see that wave 5 here is expanding as well. So it's not like this market, or this trend rather, is diminishing. It's really expanding. This trend is the first one, which is what it is in terms of size. This one here is sharper and longer, and this one here maybe not as sharp, but it's certainly, you know, it's certainly got a fair bit of power behind it, and it's increasing in size in terms of ratio. This is expanding. So as a tree would expand in nature and growth, this is doing the same thing. So we're looking at wave 4 here and wave 5 down through to here as wave 5 of 3 here. But also understand that in the triangle terms, this would be wave D here, okay? In both cases, we'll see some sort of rally here. We know that the euro can have shallow retracement levels in a bear market, generally speaking. So the other point too is that if it's wave D here, then this move up here would be looking back up into 1.3 area here, and failing to find support on this number 3 here, which would be, in terms of trading levels and price, it would be the top of group 1. So we would want to see the market fail to find tested support at that level. Certainly can trade above, but we would be looking at not to find support. And right, so in both cases, we'll see this market make a new low here and probably bounce off this 1.11 here, roughly speaking. So it's this wave 4 or wave D here that we really need to, well, I think you could certainly scalp it up, you know, but the thing is that in terms of finding another trend, you need to allow it to mature, and once it's mature and almost sort of gone rotten, then we can sort of, you know, move in on it, so to speak. Okay, so the euro pound is the next chart. Excuse me. So yesterday we were looking into this section here as a wave 2. So I was looking for a larger retracement coming back up into this little area through here, and it failed to get back above the 72 and has rolled over from that point there. So like the euro US dollar, we're looking for, from its last high, we're also looking for 5 waves down through to here. Currently we've got 1 and 2 and 3, and we're looking for 4 and maybe shallow once again and down for 5. Once we've got 5, we'll have wave 1 here and then back for wave 2 that can pull back 50 or 60%. But what we're sort of noticing is that all the retracements for this market are rather shallow. So instead of looking at 61.8 or maybe not even 50, you know, I think we need to look sort of under 50, so the 40 to 50% retracement levels for this. And also too is that, you know, we are in quite a strong trend to the downside in series of waves 1s and 2s, so we shouldn't expect too much of a resistance corrective rallies in terms of distance. Okay, so in terms of this, we can have a look at it in 1 hour, but probably 15 minutes is better. I think we'll go 15 minutes for this one. Okay, so from this 72 up here, wave 2, I was looking at this as wave 1 here, wave 2 here, and then 1 and 2. And I know this looks a bit sort of rough and ready through here, but I've pulled it apart on a 5-minute chart, and it's kind of the best fit really. And I was expecting, there is in this move up here, there is an A and a B and a C here, but the actual retracement level, I was expecting it to come a little bit higher up into the 71.20 area here, but it seems to be failing to do that. So obviously it's moving through this particular level here, but like everything that moves through, so like this one here's moved through, the breakthrough is important because it's part of the process, of course, but in terms of trading, the retest is more, you don't want to take the breakout, you want to, unless you get in before the breakout, but I find that the retest here is a better way to go. Yeah, sure, sometimes, you know, this could just keep traveling through here, but in most cases, if you know your numbers and they're large enough, and 71 is large enough, so we should see a retest of that level there. If we look at this on the 5-minute chart, for instance, this is what I was looking for in terms of an A wave, a B wave, and a C wave. Another way to look at this while I'm here is that the B wave can pull back, 61.8%. So it is possible where it is now to see this B wave sitting, whoops a daisy, it's possible for this B wave to be sitting in here as an A wave, ABC for the B wave and the C wave, and then move up here. And if it was going to move up there, then we could look at this distance here to this distance here. So it would still be sort of looking there. So in terms of the setup, so to speak, then a nice way to approach it is that I'm not quite sure if this is the low here yet. I need to put, I need to try and track 5 waves in here, but just for trading purposes, let's let's just have it down a little bit further. Let's say that the low is here. Now, if that moves up here, yes, it will react here as well, but it wouldn't want to take that low out again, so it would have to move up from that point. But not that you have to worry, because you just draw a line at the bottom of the low here and set your order up 1 point below the previous low, or look around for a the closest largest number, this one perhaps, and then set the order under that one there, because it's likely to come down and bounce off that and go back up and so forth. So, but that's the sort of setup there, that retest there. You've got your reference point and the retest, and if it's going to fail, because you don't know if it's going to fail a lot of the time, but if it is going to fail, then you've got half a silly chance of being on the right side of the market at the right time. Okay, and then this also gives you a reference point for stops up here as well. Okay, so the Euro Yen is the next chart. Now, we were looking for support on 140. Now, you could say that, well, I thought it was support, Pete, and I got in and all those sort of things. And that's fine. And we all make mistakes. I make my fair share of them as well. So, but in that, if you got into this and then the market moves back below the level, say a reference point below the level somewhere, then you just need to be out of it as such. Now, in this particular case here, we can see that, as I mentioned, the breakout's important, but the retest is more important. So this is a breakout, but the retest failed to get up there. This is a breakout, but that failed to get, to find support on the retest. None of this is a breakout here, but when it came back, it never found support on here, because this would be the reference point here, so to speak. If the market found support here and came back up through here, then that would be the breakout there. So anyway, just subtle points, but and it just takes understanding and refining and patience and those sort of things. And even once you've got all those, it's not like you get it right all the time. But if you get your risk reward, if we were considering this being a wave 4 correction here, which it still can be, and we're going to talk about that in a moment, then the possibility for upside potential is more than 1 to 3. Now this certainly can be a corrective pattern here. And if that was the case, then we'd need to look at this as the A wave, the B wave up here, and a C wave down here. Now, this C wave here would be roughly the same length as wave A. There's normally some sort of equality between these sorts of things, well, wave A and C here, and it'll be interesting to see. Well, we'd expect to bounce off the 138 anyway, so when we're working with large numbers, like say 40, then we'd use group 1 above here. So I know that's just sort of quite a large sort of situation here, but that's group 1, and support on group 1 here would be the confirmation that the market is leaving 140 and heading up to 150. So as wide as that is, it has its benefits, and yeah, and that's there. Now 38 here is the next minor level under the 140 here. If this becomes the retested resistance, then we know that the market is going to leave the 140. So it's fine for the market to spike down below here, but to find it as a retested resistance is another, it has another meaning to it, and it opens the door up for the 135. So what we can expect here, we need a little bit of time for this, is that this move down here, like the other euros, will be in 5 waves, and it's not quite finished yet, so we'll just allow that to come down. But what's really important is that if this market has, after 5 waves, has a 3-wave rally here, then we know that it's bearish at that point, okay? So, but we won't know that's a 3-wave rally until it moves back down here and creates overlapping wave structures, okay? But that's okay too, because if it moves down through here, then it's going to bounce back up here in 3 waves again, and then we can look to then we can look to move in on this side over here. Okay, now yeah, so we look at, that's just the general basic pattern. All of that pattern here might sink lower into the 138. So what I mean by that is that the 138 here could be, the pattern, let's just pretend this is the 138 here with the line through it. It could be all over the 138 on both sides of it. So there's variations of it, and you just got to kind of perhaps even look at other markets too that are similar and try and figure it out from that point. Yeah, so it does appear to be bearish, but I'm just not quite sure if it's a bigger correction just yet. And yeah, I mean, originally we were looking at having wave 5 here, but I always just felt it was a little bit short, and then we had 1, 2, 3, 4, 5 here, so we got 5 waves here. I was looking for another 5 waves, but then we started to get a series of perhaps 1s and 2s and 1s and 2s and 1s and 2s, and I thought, well, if we get support on 140, we can go for that. But the bottom line is really we didn't get support on the 140. We're looking for it, and we're hopeful, but it just didn't occur. So the next step is to look at this as an A wave, a B wave, and a C wave, and let's see if it actually moves up from that point. If not, then we have a top in the market here, and we'll be certainly moving to the downside in a much larger way. Okie doke, so that's the euro yen, and the next one's the cable. So with the cable here, we were looking in a series of wave 4s here, and I'm still looking for that situation as well. So that's the beautiful thing about wave 4s, they can do your head in. Now, first of all, we were looking for a little ABC here, and we sort of got that, and we thought we may move up from that point, but then we could see that this was a corrective move in 3 waves here, so we had to extend it down into an A and a B and a C here, and it hasn't sort of finished here, so we need to go to the bigger, next larger degree of structure, which has a 38.2 retracement level around this particular price point here. It may or may not get there. The wave C coming down through here is what we need to look at next. But once that's completed, then we can look forward to further moves to the upside. And let's just drill in here. I forgot. Yeah, I've got that. So with this wave C coming down, and I've got this, I need to lift the degree of structure up, so that orange wave 4 needs to be changed into a larger wave 4. But for the purposes of counting, it's not here nor there. Now, it is possible that this wave 4 is actually completed at the 157 here, okay, and that would mean that this would be a wave 1 here, wave 2, wave 3 in here, wave 4, and then 5 waves in here for wave 5. But I've just sort of left it open here. It's not really clear, all of this structure, but the best sort of fit I can find is this one here, where we have wave 1 and 2 here, and 3 and 4, and then 1 and 2 here, and 3 and 4 here, pulling back to the wave 4 of 1 lesser degree in here, and then moving down here further. So I can move that up here around to this one here. Now, if I'm wrong and this market pushes up from here, then it's really the 158 as support that would be the catalyst for looking at a signal to move into, and that signal would be tested support on 158 there. I know that's a long way from here, but we just need to resolve this, we need to get confirmation that this trend down here is actually completed, and without that, you're just exposed to higher risk and obviously loss, and loss is not such a big thing, but it does take time to recover the account from these sorts of things. So looking for optimal trades is the name of the game, and that's why we look at lots of markets to find those optimal situations. Okay, the next one is the US yen. Or is it? Yes, it is, yes. Okay, so yesterday we were in around here somewhere, and we were looking for this market to move higher, and it's doing all the right things. And the only change that I've made is I've put wave C here rather than over here. I'm just a little bit sort of unsure about this, but when I see this here, it's like it's in 5 waves here, then I feel like it's better suited to here. So for the time being, I'll leave that there, but I will be mindful of what I've done there and what flexibility we can have, because these things here, whatever occurs at the bottom of the market here, you know, it will create one or more waves at the top of the market up here. In terms of tracking this to the upside, it's all quite simple at the moment, because we've got 1, 2, 3, 4, 5 for wave 1, back for wave 2, then 1 and 2 here, and 3 and 4 and 5. So we're getting a nice strong third wave here, aren't we? And we know that wave 2 is simple, so wave 4 here should be complex, the alternation in nature. So at this stage, I'm just keeping wave 4 reasonably simple in terms of an A wave, a B wave, and a C wave here. If it develops tested support on the 124, then we can look at it moving higher up here, and higher up here to this wave 5 here. If the extension is in wave 3, which it is here, then wave 1 here and wave 5 will be roughly the same size. But if wave 4 pulls back too far, then we can use the 61.8% mark of the third wave to extend up to get the 5th wave here. Currently, this wave 4 here, we would look at it moving back to wave 4 of 1 lesser degree, or the 38.2 retracement level, which I haven't really looked at just yet, but it's never far off. So it's at 123.72, so a little bit higher than it is. So yeah, it's all looking quite good at that point. So that's that really. And once this 5 waves finished here, then we'll look for an A and a B and a C pulling back to probably support levels over here, and then up again here. So there is a trade from 124 to 124.50 there once support has been developed here. And the larger the correction here, the larger the correction, then the safer the next trend. And then you can also extend the distance sideways here in terms of units by the price units to the upside, squaring time and price. Okay, thanks for tuning in. Cheers.